We're half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne with Annabelle Droulers.
Our top stories. Asian stocks rise as weak US jobs opening data reinforces bets of a Fed rate cut this month. Bearish calls on treasuries grow as traders brace for the official payrolls report.
And China's weapons parade under scrutiny as speculation grows of a widening military purge. There was a rare, also candid moment caught between Xi Jinping, Vladimir Putin, and Kim Jong-un, also making waves online.
Plus, exclusive interviews ahead. We speak with Qatar Airways on Chinese demand, and the CFO of EHang joins us to share updates on its air taxi business. Well, coming into the morning session, I mean, there's quite a bit of positivity across the screen here. You can see the broader gauge up around 0.5%. The really big theme that we have this morning is this job openings data that came in overnight. So essentially falling to a 10-month low, and that really started to reinforce or just further added to these bets that we're going to see that Fed rate cut later this month. So that's almost fully priced in right now. Still this expectation for 2 reductions for the rest of this year. So we saw US stocks, for instance, climbing overnight. Again, that's translating into the session this morning. What we did see as well, the action was in that 2-year yield because we saw it moving, of course, more rate sensitive at the front end of the curve. Yesterday, it was that really big story, though. What's happening at the long end, the longer tenor ones, for instance, at the 30-year yield, for instance, the 30-year Treasury around 5%. It's sort of quietened overnight, but we still are watching JGB 30-year very closely. We've got that auction coming up later today, and the expectation the demand is going to be looking pretty weak. It's not just that story around the global dynamics. There's also questions around political instability. Is that building in Japan as well? Watching the Nikkei as well, climbing 1.2%, but certainly one of the big movers in the session today is Nidec. That's the electronics component maker, but essentially really big drop for that stock after they've just announced an external accounting probe. So waiting for more details on that, but you can see already the concerns around that is certainly building into the stock. Let's take a look at what we're expecting here for Chinese equities ahead of the open this morning, because we are looking fairly muted, but a little bit higher here. So we've had 2 straight days of declines. Again, not too much downward pressure, but certainly we could set up for a day in the green here today. Golden Dragon Index, again, didn't give too many cues overnight. But one thing that we're really watching as well is just these more bullish calls that are continuing to grow. For instance, Goldman Sachs speaking to us yesterday, saying there's still more upside ahead. And you're also starting to see this sort of movement taking place where you've got Chinese stocks and the yuan moving in tandem so far over the course of this year. So does that also start to create sort of a virtuous reinforcement cycle where you've got this bullishness in equities that feeds into demand for the yuan and again pushes it higher against the greenback? Yeah,
it certainly is a key focus here, right? The fact that one asset class helps the other. There seems to be a change of strategy here from the likes of policymakers and the like. Before it was yuan stability amid these trade tensions, and now no, let's try to nudge that renminbi stronger here to help this equity market. In terms of what to watch in the interior of China here today, of course, we're watching a little bit more about everything from, of course, this rally and where we stand right now. We're going to do a pulse check on the earnings picture here with Morgan Stanley in just a bit. But U.S. fiber optic tariffs, that's certainly one thing to watch. And there are some stocks related in China that are going to be in focus here today. The renminbi fix, of course, as Bell mentioned, if we see a continued sort of strength in that currency. And then HIBOR, of course, remains a key focus here as well. And Sun Kai earnings, that might really play into that as well, given what we've been seeing here in the city. Of course, the next developer to report as well. And of course, India exposed stocks because there's talk of this consumer sales tax and the like in India. But yes, this is probably one of the worst markets we've seen this year globally, which is India right now, just given all the tariff threats and the like.
Really interesting as well that sort of movement from India to cut the GST is coming just hot off the heels of Modi's trip to the SCO as well. And 2 companies, or countries that can really are falling back onto their domestic consumption story to sort of offset the impact of tariffs.
That's true. And it brings us back to what's going to happen with the macro picture, right? When you have the data that seems to be so sensitive to what the Fed's going to do, right? That JOLTS data certainly did jolt the market. There's a whole bond reversal as well. You have the non-farm payrolls next. And really, it's going to be a key question. If we see a weak print, does it settle the rate cut debate? And in some ways, should we still put the 50 basis points, some say, on the table? The likes of Stephen Englander say if you have a print that's around 40,000 for NFP, that might spark that sort of discussion once again.
Yeah, and it's not just, of course, the gyrations you're seeing in treasuries. I mean, Japanese bonds are the other big watch, because we've certainly been keeping a watch on what's happening at the long end of the curve there. And it's not just the global stories we're saying, it's also the domestic story. The sort of question, can Ishiba, the Prime Minister, continue to hold on to power? So we've got that auction coming up later today, I think 12:35 p.m. local time.
Yeah, as you mentioned, right, there was a key power broker, some senior officials within the party that have left, so that casts doubt about whether Ishiba can stay in power. That certainly is leading the long end to sell off quite a bit here as well. But as you mentioned, the bid to cover, I think, was 343 last auction.
In August, yeah.
Some traders say that might not even cut it, just given all the risk out there here right now and what we're seeing globally amidst this kind of bond sell-off. So there's a lot, of course, on tap here. Let's bring in Paul Dobson, our Asia executive, markets executive editor, to join us a little bit more about really what's in store. Yeah, I mean, NFP is going to be the next big one to watch. You know, does this JOLTS data certainly imply that we're going to see another weak print, and what does it mean for markets, Paul?
Morning, Yvonne. Certainly the market took some encouragement, if you will, from the weaker JOLTS data. It's an interesting one, isn't it? It's bad news on the economic front, really, but if that pushes the Fed towards cutting interest rates, makes it more of a lock for September, then stock investors are seeing that as a positive rather than a negative. They're not worried that the economy is slowing so rapidly that we need to slam on the brakes and, you know, or pump the gas or whatever it is in order to get things going again. Not worried about emergency measures or anything like that. But space for the Fed to ease rates from a position of reasonable confidence and be able to keep on pumping that stock rally. But I think, you know, in the background, we also have this idea that with what the Trump administration is trying to achieve with the Fed, at some point in the next 12 months, we're going to be running the economy hotter. In any case, they're likely that the cuts are going to come through from the Fed a little bit more aggressively with a different Fed chair. And so that, again, would fuel further gains in the stock market, all things being equal, until or unless inflation starts to look like it's getting out of control. But that's a debate for another day. At the moment, the market pretty confident that the labour market is weakening at a pace that will allow the Fed to cut without causing any signs of panic.
We mentioned this Japan bond sale, the debt sale auction coming up later today. I mean, we're talking about what happened in August. I think also what was different in August, we had that reassurance from the finance ministry at that time that they were going to be sort of pulling back on their issuance. But this time around, we don't seem to have any sort of comfort for investors. So what can we expect later today?
Well, if you're looking for comfort for investors, then what we do have is record high yields going into this auction. So the possibility that you're going to get paid more for taking on that risk. But on the other hand, we do, as you're saying, have the additional political uncertainty. And it feels like, having lost his number two, the least that Ishiba is going to have to do is himself put in place some additional fiscal spending in order to sort of cement his place and retain his credibility. In a different scenario, if he's deposed and replaced, then the likelihood is that the spending would be even more. So for bond investors, it's either slightly bad news or particularly bad news when you're worried about Japan's debt load and those sort of debt to GDP metrics. On the other hand, you know, like I said, we are getting to the point where it's attractive as an investment option, as so long as yields don't keep on rising, the sell-off doesn't continue. So long as people start to regain faith that you can get paid a decent amount for those investments. So there'll be a lot of focus on the bid to cover ratio, as you said. Something over 3 really doesn't suggest like the market is absolutely terrified here or that it's going to be a disastrous result. I don't think anybody's worried about the prospect of a failed auction. It's just that each time we have a sale, if those costs are rising for the government, then that sort of can snowball over time and become more onerous for Japan. And that's the sort of difficult situation that it needs to find a way to break through from.
Paul, really great to have you this morning. That was Paul Dobson there in Singapore. Let's bring in Jonathan Garner now. He's the Chief Asia and Emerging Market Equity Strategist at Morgan Stanley, joining us now from Singapore. And Jonathan, we were just going over there the expectations around the Fed, the BOJ, but let's start with the Fed and this assumption really going into the September meeting that we're going to see a cut of 25 basis points. I mean, is there anything that can kind of test that, do you think? And what's the then meaning or implication for Asian equities as well?
Yeah, that is looking increasingly likely. I think it's really important to step back a bit here and understand that valuations in equities, including here in Asia, are quite high. If you look, for example, at Topics, it's trading close to 16 times forward. If you look at the broad emerging market or Asia ex-Japan indices, they're about 13.5. And that's a really important point, because you can't really just talk about the Fed cutting and what equities are going to do without understanding where we're priced and also what's happening to earnings. And earnings estimates revisions are actually drifting lower, really across the board. So we made a call a few weeks ago. This is actually quite a dangerous situation. And after the very large rallies we had since the beginning of May, for example, Topics up almost 20%, broad EM up 15%. You've seen the recent strength in China. We'd very much recommend that clients move to the sidelines here. That's the important message from us.
Okay, until you see any sort of meaningful catalysts, what about the AI trade? Is that getting a bit tired now too, Jonathan?
Yes, I think if you look at the situation broadly in Asia in relation to tech stocks, which are overwhelmingly tech hardware, that's a sector that's valued roughly 4 times the overall market. So if you look at a metric like price to sales, it's trading about 6 times price to sales, the market overall about 1.5. That is a very big valuation premium, and it's probably going to compress from here. Obviously, the CapEx story for now is very strong. But remember that tech historically has been a cyclical. And I guess the unknown is what happens to that CapEx if the global economy continues to slow. And that's certainly what's happening out in Asia at the moment.
Jonathan, just as we've been speaking here, we've had a breaking news crossing the terminal about China looking at curbs or restrictions on stock speculation. This is really that move now to try and foster more steady gains in the market instead of what has been sort of quite a significant rally over the past few months. Proposed measures, for instance, include the removal of some short selling curbs, options as well to rein in speculative trading to prevent heavy losses. Interesting as well, because we have seen some investors moving back into snowball derivatives. But what's your take? I mean, not so much on this story, you haven't read it, but about that sort of appreciation. You're talking about the valuations. What do you make of Chinese valuations right now?
Well, I've covered onshore and offshore China for over 20 years now, worked very closely with my colleague Laura Wang, who I think is on your show quite a bit. And I think we've been quite clear that our view is differentiated from some of our competitors. Our base case target for the CSI 300 is 4,000. Again, it comes back to earnings. We're not in a broad reflation in China. Earnings growth is going to be mid-single digits at best for the A-share market. And valuations at the current spot price are about 14.5 times forward, which is not incredibly expensive, but it's certainly above recent average valuation levels. And Laura and I publish every Friday a kind of indicator that looks at things like margin, account opening, some of those things that you just discussed, and I haven't read your story. But in the piece that we published last Friday, these were starting to look quite extended. In fact, they were broadly as extended as at the top of the rally last September. And we noted that last September, basically a year ago, at a time, again, when there was, I think, too much optimism about this year being characterized by broad reflation in China. One other key point to watch is, I think you put up just before I came on your show a chart of the currency against the market. I'd really recommend looking at the bond yields. There's been a secular bull market in bonds in China for some time now, consistent with low nominal GDP growth. And those bond yields at the 10-year maturity have come off the floor, but very, very slowly. And in this last week, they've stopped rising. And that's telling you that consistent with the published economic data on China, that there is not a broad reflation narrative here. So we've got interesting, what we call alpha opportunities, things like China involution, for example, but there's not a broad reflation story in this market.
All right, Jonathan, we'll have more on this anti-involution and the like here. Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. He's staying with us. Coming out, look at the aviation outlook with the Chief Commercial Officer at Qatar Airways and whether they're seeing Chinese demand growing. He's going to be speaking with Avril at the Goldman Sachs conference here today. We're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. We're checking China futures here right now, of course, as we look at right now. We see a little bit of a pop up, but we come back off here on this story that we've been tracking here about regulators are considering a number of cooling measures for the stock market here in China as they grow concerned about the speed. And of course, the fact that they gained 10% on CSI 300 in just August alone. They're looking at everything, as you mentioned, right? These short selling curbs that could be removed as well right now.
Yeah, that's right. And you are seeing the market reaction to that. I mean, you've seen some moves in futures, for instance, just as we head into the open, and also the offshore yuan just edging a little bit low there. You can see, though, relatively unchanged, I guess.
Yep. Let's bring in Jonathan Garner. He's still with us here right now to talk us through some of the, as you mentioned, Jonathan, about the fact that, Chinese bond yields picked up just a little bit here in the face of anti-involution, the like, and amidst this whole equity rally. It's not really quite pricing in reflation just yet, was your last call. But a lot of people argue what is driving this equity market in China is the whole retail part of this, that household savings and the excess amount that's been piled up during the pandemic and the like are finally going to get deployed. And given how low interest rates are in China here right now, how much weight should we put on that narrative?
Not very much, frankly. If you look at Japan, you could have said the same thing for 20 years as rates eventually went to zero. But households, quite wisely, in a deflationary environment, continued to hold on to their cash. And I think that's an important thing to remember here. You don't want to really deploy your cash unless the stock market offers you attractive earnings growth and dividend growth. And I think the jury's still out on that in relation to China. So I don't tend to find those funds flow arguments very compelling. And of course, there are other opportunities. We mentioned bonds, but there's also a global bull market in gold, for example, which is accessible to Chinese households as well and is a store of value.
What about then the institutional investors? I mean, some of the analysts we're speaking to are saying that they're starting to see institutional funds coming back in just even in the last few weeks in quite a big way.
Are you referring to offshore institutions or onshore institutions?
Yes. No, offshore.
Offshore. So, yeah, it's certainly the case that offshore holdings of China A shares have moved to very low levels over the last 3 to 4 years. And at the margin, there is some interest. I think that's part of the overall debate about valuations in the US and valuations in international equities. And yes, there's some kind of diversification happening there. But again, China's just part of a global story there. If you look at the flows into, for example, European equities or other large geographies in equities, they're far larger.
Jonathan, you and Laura always talk about, you still need longer term view of China, is that you still need earnings projections that are resilient. You still need economic fundamentals to improve. You just came out with a report on the earnings season so far in China. What have you found so far?
Well, there is good news. I mean, we're now finally tracking in line with analysts' expectations after basically 3 straight years of earnings misses. So the analysts have finally, I think, gotten their minds into understanding the underlying deflationary environment. And just to be clear about that, if it's 4% nominal GDP growth, then companies that are able to grow 6 to 8% are actually doing quite well, and 10% doing very well. And so I think the name of the game here, just as it was in Japan during its troubled 2 decades, was really about stock selection. And that's what we try to do for our clients, stock and sector selection within an overall difficult macro environment.
What about your views on India as well? I mean, you've said that they're in a secular bull market despite some near-term challenges. Some of those challenges, of course, relate to trade. And just overnight, we had them cutting the consumption tax to try and help the economy. Do you see that sort of shift toward domestic consumption being something that could boost the stock market?
Yes, and in India's case, nominal GDP growth is running at around 10 to 12%. So that's 2 to 3 times that of China. And certainly, if you think about GDP per capita being so much lower, the ability to integrate labor in India into the global economy, broadly speaking, these are very sort of bullish themes. What we had late last year was some central bank tightening, and government capex spending was quite weak. Now you're actually getting not just monetary support, but fiscal support, including the GST cut that you mentioned. So it's very likely that earnings will swing up on a cyclical basis from here, and valuations have come down quite a bit. It's still an expensive market, but deservedly so given the trend earnings growth, but it has derated by essentially about 5 forward PE points from the top, which was a year ago. So it is quite an interesting market to look at here.
Real quickly, though, Jonathan, the tariff headlines, right? I think this is the reason why we've seen net selling from international investors. The fact that they're still facing 50% tariffs from the U.S., is that going to continue to be a big overhang for this market?
Well, foreign investors have been selling Indian equities and domestic investors have been buying for better part of 2 years now. And part of the reason was this debate about valuations and the cyclical outlook, and it has been through a cyclical downturn. The tariff thing is more recent, but it's important to point out that India exports to the US in terms of goods is maybe 2% of GDP. It's relatively small. And I think if you look at India, China, the fact that they've resumed direct flights and the fact that there's a kind of a thawing of the relationship between India and China somewhat offsets that. So there's no very large shock coming India's way on the export side overall.
Yes, certainly signs of a rapprochement even over the weekend. But that was Jonathan Garner there, our Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. We'll have plenty more ahead. This is Bloomberg.
Pre-market is looking like this. Looks like we are likely to snap out of 2 days of losses in the Hang Seng here today. We're about 0.6%. Tech seems to be catching a bid here right now, given what we saw, the record sort of with Alphabet overnight, Apple as well. Certainly saw some big moves as well. So certainly that maybe helps with the whole AI theme here today as well. And 714.16, we're still tracking, of course, this story about China weighing some curbs on when it comes to this equity rally.
Yeah, exactly. Trying to essentially pull it back in a little bit. But some of the things as well we're tracking in the session is going to be property stocks as well. Sun Hung Kai reporting later today. Welcome back. You're watching the China Show this morning, and we're just about to have the markets opening here. I mean, it's been a very interesting morning with a big Bloomberg scoop actually just in the last few minutes. So $1.2 trillion. That's the size of the rally we've seen since the start of August. Now the question is, just how comfortable are regulators feeling with that sort of pace of movement? Is it too far, too fast? And do we need to see some measures just to try and cool it down a little?
Yeah, it seems like, according to the scoop, that they are looking into some of these measures, right? Everything from removal of short selling curbs and the like. So certainly they want to continue with this slow sort of bull run to actually bring some more confidence back into this market as well. And really, as you say, bring that virtuous cycle across the renminbi as well, that one asset class can actually help the other. That certainly is an interesting sort of dynamic and shift that we've seen from Beijing when it comes to their strategy moving forward here. So that certainly is one theme that we're watching very closely. Of course, the macro side of things, we're still tracking, of course, this reversal that we've seen in the bond sell-off here after that JOLTS data as well. Also, when it comes to the JGB bond sale in Japan for the 30-year, that certainly are the key risks, at least before we get to that jobs report. So there's still a lot to happen in the next 48 hours or so. But right now, we are seeing at least the onshore markets are slightly to the upside when it comes to the CSI 300. We're just up 0.1%. But right now, we're watching very closely the long end of the yield curve in China as well, because given just what we we've been seeing with the retreat on equities. We have seen actually those bond yields now on the 10-year actually retreat back to those 2-week lows. So that is one thing that Jonathan Garner was mentioning from Morgan Stanley, that everyone's pricing anti-involution and that this could lead to maybe reflation. That melt up was quite marginal, as he says. So that's one thing to watch there. But 174 for your China 10-year yield here this morning. We're tracking, of course, oil prices, just given the fact that we have seen reports that possibly OPEC Plus maybe heading into this weekend meeting here and looking to maybe boost supplies. That currently is the reason why some of these oil stocks are slightly lower here in the region today. We're watching the likes of Queijiao, Maotai, Capricorn. These are some of the stocks, of course, that a lot of traders have been eyeing on here when it comes to these southbound flows and the like. So certainly one thing to watch, not southbound flows, but what they're looking at in the A-share market. You take a look when it comes to Hong Kong, looking a little bit better than onshore here this morning. Hang Seng is up 0.4%. HS Tech is doing quite well here today. We're seeing some decent gains when it comes to Baidu. Alibaba's heading a different direction here. Meituan, with a pretty interesting take from Arete, Sean Yang, downgrading that stock yesterday. Now he sees a price target of about 94, I believe. And that certainly is a sign that maybe the lowest on the street there right now. We're at 101 for the stock. So obviously we'll be tracking a little bit more on the consumption space. BI just came out with a big report about the trends there. And of course, we're watching earnings, which is very telling as well, given what we've been seeing. Sun Kai is the next one to watch. So the stock is slightly up leading up to those results here as well. We did just hear from Henderson Land, the CFO, yesterday speaking to us at the BNP Paribas Summit. And he talked about, look, it seems like the residential property side of things is bottoming out in some ways as well. I think we've seen 4 months where new home prices have actually improved here in the city. So maybe we could see some decent results coming through for Sun Kai themselves as well. We mentioned about the oil story as well. Let's see how these Chinese oil stocks are doing. It's a mixed picture how you look at it here right now. But PetroChina, Costco Shipping Energy, that's slightly up here this morning. And we're watching China fiber optic stocks, right? So what we heard from China was that they were imposing these levies on the U.S. optical fiber imports as well because of anti-dumping. So that certainly is what we're looking at very closely. So some of these domestic players are rallying quite well here today, Belle.
Yeah, really interesting. It's really that question of these trade tensions and as well how China plans to fight back against the US. And one of the ways that they're planning to do that is trying to boost consumption, which is why you mentioned that BI report, but why it's so interesting, because the Bloomberg Intelligence report essentially finds that the consumption outlook is still not sustainable as a growth engine. So let's get more on it now with our senior analyst at Bloomberg Intelligence. Catherine Lim is joining us this morning, usually in Singapore, but here in Hong Kong this morning. So Catherine, I mean, it's a really great report, very lengthy as well and detailed and worth reading. But what you say is that essentially the outlook is falling short of consensus, and closing the gap, it's really not enough to rely on subsidies that we've seen for things like smartphones or cars or appliances.
Yeah, we are stepping into a very high base. Annabelle, if you recall, we've seen the subsidies coming in the same second half of last year. So trying to actually overcome this hurdle right now, I think this is where, the biggest question lies. Can, China get more people to buy more cars, smartphones out there? And they've actually dangled the carrots with consumption loans. They've actually dangled service businesses with loans. And really my take is that, I'm a little more skeptical about the consumption loans because, culturally, we're just not really, a group of consumers who borrow just to spend, just to buy smartphones, for instance. But I think the service sector business loan is something worth looking into because, number one, it creates employment. And then, it actually helps keep the consumption sentiment upbeat, depending on, what are the perks, the promotions out there. We've seen it from the, online platforms when it comes to food and on-demand delivery. So lots of moving parts. But again, at this juncture itself, as we step out of the results season, I think most of the companies would concur that August hasn't been a great month when it comes to consumer spending.
Yeah, you highlight about the structural changes right now, whether it's fitness trends, as you mentioned, affordable premium goods. Yeah. There also is this whole redirected tourism sort of theme going on. How do you think that could give in terms of longer term? How does it change the picture for the consumption space? And which is probably the biggest driver for markets?
I think really the focus on consumers right now, it's about the experiences and the message. You've got to now convince them to spend, and they are willing, even to spend on premium sports goods, things that's actually, whether it's Ons or Arterex or Solomon for that matter. More importantly, I think, the communication, and that's where social media comes into play, in the entire environment right now. The messaging of by the brand companies, by the retailers, and why you should actually be spending. And we're going to actually see more of that coming through from the various retailers and consumer goods companies into 2026.
What's the role of digital platforms here? I mean, we've had so much focus on the food delivery price wars between JD, Meituan, Alibaba, but you still see them playing a very critical role.
Right. Well, they're going to be huge, and clearly, I think directionally, they are all aiming to be the go-to platform for all services, all purchases out there, and that is the stage that we're in right now, whereby they are now in a stage that they're trying to convince and build loyalty among the Chinese consumers that they are the to-go-to. It's going to take time, and that's why they are investing. Meituan's going to go into losses this quarter as we speak right now. I think Alibaba, likewise as well, even though they seem more confident about, improving the operating economics, and they clearly have a huge user base from Taobao, Tmall, from so many years itself. So we really have to see whether that loyalty sticks beyond Singles Day. And we all know that is the next big thing for Alibaba, and they're going to go all out and, trying to actually break down, memberships across their various platforms into what I see as potentially a very, very strong user base that can create loyalty for Alibaba.
Yeah, as you mentioned, right? It's so much focus on this battle for market share. When it can actually shift to kind of profitability and sustainable profitability. Catherine, it was great to have you here to bring us this report. Catherine Lim there, our Bloomberg Intelligence senior analyst. Make sure to check out their report there with our Bloomberg Economics team there on the terminal as well. To that Bloomberg scoop right now, of course, China's financial regulators are said to be considering cooling measures for the stock market as they grow concerned about the speed of the rally. Let's get to our Asia Stocks managing editor, Lan Ting Tu. She joins us now from Singapore with more. We talked about this sort of slow burn and slow sort of equity rally that it seems like regulators want to engineer here right now. What more do we know on the measures that could be put in place?
Yeah, indeed. I think, the military parade is really a bit of a watermark moment. After that, leading up to that, I should say, there's a lot of effort to maintain the stability of the market. But after that, there's going to be a bit of, efforts to rein in any speculation. That's according to people familiar with the matter. The measures that are mulled by the regulators include, removal of some short selling curbs that got placed late last year. There's also other efforts for brokers to refrain from aggressively marketing their around-the-clock services to help open new stock accounts. And also, social media platforms were alerted not to, aggressively publicize contents to publicize, I would say, talk up the bull market. And so all these things, I think, are just sending a signal from the government that they are really taking it seriously, that they want to protect retail investors this time around to not storm into the market and potentially get burned, the episode that we saw in 2015.
Yeah, it's really interesting, this desire and these comparisons that are continually being made back to 2015, which was a period where a lot of retail investors were actually burned. This time around, though, and we just were speaking with Jonathan Garner, for instance, who's saying that narrative is being overplayed, and actually it's smart money that's piling in, whether it's high net worth individuals, corporate investors as well. I mean, do we need or do regulators need to be as concerned about that strength of the appreciation they've seen this time?
Yeah, I think overall there is a key difference here. In 2015, the regulators don't really have much of a tool to curb excessive rally or to stop the rally from running too fast. But this time around, they actually do have several tools in their toolbox. One would be the ETF holdings that Huijin has. Huijin is a unit of China's sovereign wealth fund. And because of all the supportive measures, they have now accumulated accumulated $180 billion worth of index funds. So they could, release some of that or sell some of that to curb any overheating signs in the equities rally. So I would say, that is sort of the main and the new thing that we're seeing in the market to give people some confidence that the regulators this time could actually be successful in reining in some of the overheating signs of the market.
Lianting, thanks very much. I mean, it's great exclusive, already the most read on the terminal. I'm sure it's going to stay there all day. But that was our Asia Stocks Managing Editor, Lianting Tu, there in Singapore. And we'll have plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. Turning now to the aviation industry. And as the summer travel season wraps up, we're taking a closer look at the outlook for airlines for the rest of the year. Let's bring in Avril Hong. She is at the Goldman Sachs Asia Leaders Conference with our next guest. Avril.
Indeed, ladies. Joining me now is Thierry Antinori, Chief Commercial Officer at Qatar Airways. Very nice to see you, Thierry.
Good morning.
So you're here at the conference. Obviously, China, Hong Kong is of significant importance for Qatar, but talk to us how that fits into the strategy for the airways.
Yes, I am here in Hong Kong because Asia is very important for Qatar Airways and the Hong Kong market very important for Qatar Airways. I am also here because today there is a conference, yesterday and today, about the Qatar Vision 2030 with bankers, investors and business people, trade people. And Qatar Airways, as airline of the state of Qatar, is part of the infrastructure of Qatar, and we contribute to the vision of this country.
So China, very important. It's also a market that you've always wanted to fly more into. We've seen recently the disbursement of these air traffic rights. I think Qatar got 7 out of that. How did you feel about that? Is that something that came as a bit of a disappointment?
Asia is very important for us. It's 55% of the worldwide population, more than 30% of the worldwide GDP. Qatar Airways is a global player in Asia Pacific. We have 90 destinations in Asia Pacific and Middle East. Of course, China, as the biggest economy in Asia, is from utmost importance for us. And we fly 6 cities to China. We got now additional traffic rights to operate a second daily flight from Doha to Shanghai this winter. So we are looking forward. And Hong Kong is a very strong market also for us. We operate 37 weekly frequencies with a cargo.
So looking forward, what is the pipeline for expansion for China-Hong Kong?
The pipeline is to continue to grow with the Shanghai flight, additional Shanghai flight I was mentioning. Is also continue to grow in the cargo operations. We are the second largest cargo airline in the Great Bay Area. We operate also 9 flights a week to Macau, on top of 37 weekly to Hong Kong. And we have now a strategic partnership that will be signed next week with China, formalized. It's a known partnership. It will formalize next week, where China is a strategic partner and choose Qatar Airways as a strategic partner to work together on logistics between GBAs and Latin America and Europe. So we are very proud of that. It's part of the strategic expansion we have through the cargo arm of Qatar Airways with China.
Your CEO also talked about more investments. Where are some of the potential countries or regions that this could happen in? And are you thinking about acquiring stakes in other carriers?
We just make 2 acquisitions directed and led by our group CEO, Bader Almir. One in Australia, recently 25% of Virgin Australia, and one in Africa, and it's very important, in Airlink. Why? Because if you look the modern Silk Road between China and Africa and Latin America, Doha is on the way. So the best way to connect now China for passengers, but also for cargo to Africa is through Doha. The best hub in Middle East and a very comprehensive network of Qatar Airways from China to Africa, where we operate 30 destinations with Belize, and where we have the strategic partnership with Airlink.
What about India? What's the India play for Qatar? Are you also potentially looking at exploring stakes in Indian carriers?
India is very important as a market because we spoke about China and we spoke about Africa. If you combine China, Africa and India, you have more than 50% of the worldwide population. India offers the biggest diaspora of citizens all around the world, so it's a strategic country. We fly to more than 10 cities there, so it's an important country. We have a partnership with an airline there, Indigo, but we are working in this frame without having intention to make any shareholding, according to my knowledge.
Okay. We're talking about your business strategy in relation to geographies. What about the demand you're expecting for the fourth quarter of this year in relation to bookings relative to capacity? Is it likely to be better than what we saw a year ago, you think?
We have a very good demand and a very good outlook in the passenger business. So we are satisfied with that, and we'll communicate more precise number soon. But we have now 5 months in our financial year, starting in April, and the passenger performance is solid with a solid outlook. Regarding cargo, the situation globally is a bit more volatile, but we manage it also according our plan because we have a strong agility at redeploying our assets and our 28 aircraft freighter fleets.
And solid outlook then for passenger yields as well, is the expectation?
Overall, the revenue outlook is solid, yes.
Okay. What about when it comes to some of the other bits and pieces of the puzzle? I mean, we have lower oil prices. Is that something that's being included in your pricing strategy that's being passed on to travelers?
Everything is including. For us, Qatar Airways as a 5-star rated airline operating a 5-star rated global hub, the only global hub in Middle East rated 5-star. It's about to deliver the best value of money and to adapt to the context. The consumer has to enjoy and the best value of money in premium cabin as well in economy cabin through the best airport in Middle East and one of the best airports in the world. And it's our job to adjust according to the context. It's like in a cockpit, you have weather radars, and we have also in our management cockpit radars, and one of the elements of radars are looking at the fuel price, but there is other elements, and at the end it's about to continue to progress with the customer experience, customer satisfaction, and the demand for the product of Qatar Airways is growing and growing, so people want to fly Qatar Airways and they like our brand.
It's a strong brand, undeniably. What is your sense of what we're seeing in slowing plane deliveries? I mean, there was a mega Boeing order. Is what we're seeing in plane deliveries something that could affect growth prospects at all? Or is that less of a concern for Qatar?
Oh, thank you for mentioning this order. 210 aircraft, wide bodies, the largest ever wide body aircraft in the history of Boeing. And so it set up the stage for the growth of Qatar Airways for the 15 to 20 next years. And we are absolutely confident that everything will be delivered according to the plan, and we fully trust our partners at Qatar Airways.
Looking forward to seeing all that as well. Thierry, it's been a pleasure. Thank you so much for sharing your time with us and the plans for the company. Thierry Antinori is Chief Commercial Officer at Qatar Airways. Belle?
Thanks, April. Yeah, great interview there. And of course, if you're a subscriber or you want to rewatch that conversation, you can via interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. So check it out at TV Go. We'll have plenty more ahead. This is Bloomberg. Well, Bloomberg's learned that Apple's planning to launch its own AI-powered web search tool next year, stepping up competition with OpenAI and Perplexity. Sources say it will be integrated into the Siri voice assistant. This is, it's a really great story from Mark Gurman. Of course, people familiar. Mark Gurman is certainly our resident Apple expert, but I mean, it's certainly been an interesting evolution for Siri itself. I mean, right now it's relatively basic. I mean, it can answer questions about maybe like someone who's famous or events or
what time it is.
Yeah, what time? Yeah, okay. Like if you don't have a watch or an Apple Watch, but it definitely does struggle with more complex queries, and so Siri has sort of become emblematic of their shortcomings in AI, and now it's, I guess, how they're looking to rethink that or to move past it.
Yeah, I think how to revamp Siri has always been a long sort of debate, and certainly they're getting closer to that right now, and I think they kind of want to make it more like a search tool, right? And they're working with the likes of Google and what they already do with their AI overviews on their search engines, and I think that's quite exciting as well. But finally, we're seeing some signs that they're trying to at least narrow the gap with the rest of the pack.
Yeah, and it's really interesting, well, the partnership with Google itself. I mean, firstly, we had the ruling, for instance, in the US this week that they actually could continue to work with each other. So that was a win for Apple, of course. But also what's interesting and what came out of this story from Mark Gurman is that Google actually wasn't the initial frontrunner in this project at all. Apple was actually looking to work with Anthropic. But the issue became that Anthropic was looking for too much money. So they were looking for around $1.5 billion a year. But Google, it turns out, a little bit more open to some favorable financial terms. Yeah,
there was also that ruling in the courts for Alphabet as well, right, that they don't have to sell Chrome. So that really led to the stock to go a record. Apple also was up some 4% as well. That's really helping a little bit of the tech space here today. Coming up, EHang CFO Connor Yang. This is Bloomberg. Welcome back to the China Show, second hour. Here's a look at the CSI 300 a half hour into the session. It looks like we are heading lower here this morning by about 1%. You got to wonder, I mean, we have this military parade that is now over. And then now this latest scoop from Bloomberg that regulators are looking to maybe look at some curbs on stock speculation and really try to slow down the gains that we've seen in this equity rally. Maybe that's why we are seeing a bit of pressure on onshore today.
Yeah, I think it's going to be really interesting just how this sort of story develops and whether we get any confirmation from the Chinese side. What sort of measures would they be looking to take? Because I think some of the concern sometimes comes when people are concerned about heavy-handed intervention from China, because that hasn't always gone too well. But let's take a look at what's happening across broad markets as well in the session today. I mean, there's a couple of different sectors we're watching. For instance, car makers. We're actually seeing these declining across the board here this morning, even though we saw preliminary retail car sales rising 3% on the year. But it is that sort of big question. We're heading into the end of the year. Do we see a lot more discounting, and what needs to happen to boost these car sales in the market? Let's also take a look at solar stocks today, because there's a couple of different themes as well. Firstly, there was a ruling from the US Trade Court overnight that the Biden-era solar tariff moratorium is invalid. So this essentially was a 2-year pause on tariffs on solar imports from Southeast Asia. That's found to be unlawful, and it also needs to be vacated according to the filing. So you are seeing, again, some big gains here. Another story, though, was also around this finding or outcome from the SEO, essentially, that they wanted to increase solar capacity. So you are seeing in the session today Asian equities still managing to stay in the green, and that's also another theme here, which is really around the jobs or the JOLTS data, because we saw it rising or falling back down to a 10-month low. Fed easing is certainly, the key question, and basically, I mean, a cut this month is fully priced in now.
Yeah, it may be sense that the NFP, non-farm payrolls on Friday, is going to be a weak enough number to justify this rate cut in September. That seems to be the growing consensus here right now. And even people exploring the fact that 50 basis points might still be on the table. It really depends on how weak that jobs report is going to get. And certainly there is that sort of August anomaly that Bloomberg Economics' Anna Wong highlighted, that usually you do see the data undershoot consensus. She says that might not happen this time around. So it's far from certain whether this NFP report is going to settle the whole rate cut debate just yet.
Yeah, and also, of course, I mean, we've seen lots of gyrations in the bond market at the long end of the curve. But let's talk about Japan as well. I mean, it's the bond auction coming up. I think we're going to get those results in the next 90 minutes or so. And what's that bid to cover ratio going to look like?
Yeah, I think it was around
343.
343 was the last auction in August as well. And whether if we even see that, if we meet that, that still it may not be able to appease the bond traders out there, just given the steepening trend that we've seen globally across bond markets right now, and given what we're seeing domestically in Japan as well. It's still a bit of a question mark how long Ishiba can really stay in power. So certainly there's a lot of themes that we're tracking here today. Let's bring in Mark Cranfield, our MLS strategist, joining us from Singapore with more. Let's start with what we saw with this Bloomberg scoop about Wu Qing and from the CRSRC might be looking at ways to slow down this rally. Is this going to be a pretty chilling sort of news for many equity traders out there now, Mark?
I mean, let's say first of all the details are a bit vague. We don't know too much about it, but certainly the idea of curbing speculation, you can see why investors in China would want to sell first and ask questions later. Because if you look over the past decade or so, any time that the Chinese authorities, even with the best intentions in mind, have come into the Chinese equity markets to try and bring a bit more sense to what was a very frothy or overexcited markets, it hasn't ended well at all. It's usually caused abrupt sell-offs in the market. If you look at some of the episodes in the mid, like 2015, 2016, around there, during the pandemic period as well, generally it's been seen as rather heavy-handed, and it hasn't gone down well with investors at all. Of course, we would like to see a little bit more of what they really have in mind, and maybe they're just thinking aloud. Maybe they're just sending out a warning signal to see exactly how the market does respond from that point of view. But if they do go ahead and bring in measures to try and curb it, they can expect to see a fairly decent retracement in the market, which may end up being just a healthy situation. The market has got a bit extended. People have been talking about leverage numbers. Margin trading has gone very, very high again, probably the highest on record in China. That's a sign of probably a lot of hot money that is struggling to find its way into the market. And some of these themes, like the AI-driven themes, even the new robotics excitement as well, maybe they're getting a little bit overdone and time for people to cool down a little bit. But certainly they have to tread a little bit carefully here, because Chinese markets are notorious for going up very quickly, coming down very quickly. So be careful how you implement curbs on speculation would probably be the message to the Chinese authorities at the moment.
What about in Japan? I mean, we're talking about this bond auction. We've got the results coming up in 90 minutes. What are you going to be looking at in terms of that bid to cover ratio in particular?
Yeah, that's certainly, as you highlighted, anything below 3 would certainly not be a good signal. And we also have this thing called the tail, which is the difference between the highest and the lowest price in the auction range. This year, it's been all over the place. We've had 8 30-year auctions so far this year. The tightest one had a tail of 2 pips and the widest 75. That's crazy. I mean, for a major government bond market to have that kind of range really is almost unprecedented. So it just tells you that it's not a particularly popular duration, the 30-year. And adding to the problem for it is the fact that over the past 2 or 3 years, Japanese yields have been steadily climbing. They've been issuing a lot of 30-year bonds. The people that have been buying them, say 2 years ago, are heavily underwater. Now, typically what happens when you get a new auction, some of the money which comes in to support the new one is people flipping out of the previous ones. They want to have the most up-to-date issues. That's becoming increasingly difficult because people don't want to realize the losses from the bonds they bought previously. So there's less money to support the new auctions. That could make it a bit tricky today because some of the natural buyers will have to be on the sidelines because they don't want to participate yet. Absolute yield levels are as high as they've been for a couple of decades. So in a way, that's supportive. But the international picture is not that great either. It's not just Japanese curve that's steepening. France, UK, US, they're all doing it at the same time. It's possible that today's auction itself may just about pass the test. It may be okay. But the secondary trading is going to be the problem when you look across at the rest of the world, which is not helping out. And as you mentioned earlier, the Japanese political situation is not clearing up quickly. They really need to get that sorted out as well. You've got the Bank of Japan coming up as well. They would like to raise interest rates, but they're doing a bit slow about doing it. And the yen is a bit weaker than it really is good for the market as well. All of those things in the background mean that even if the auction just about goes through, the secondary trading is probably going to be pretty tough for a 30-year that not many people really want.
Yeah, especially if you see that 30-year yield, which briefly touched that record, right? 3.285% mark certainly is going to be a big sort of headwind here today. Mark, thank you. Our MLI strategist, Mark Cranfield, joining us on what to expect through the trading session here today. And of course, more really on China, because we talked to a lot of guests yesterday, whether it's from the Goldman Sachs summit here, or a conference, I should say, or BNP Paribas yesterday where I was. And there seems to be more of an interest, at least from foreign investors, they say, and clients themselves, that are towards this equity market, right? And it's no doubt, but Morgan Stanley just came up with a note saying, Chinese equities received the biggest inflows among emerging markets for the month of August, right? And really the outflows were really morely, and other markets like Taiwan and India, just goes to show, right? There is an interest to get back into this market, whether it's actual asset, allocation into this market is one thing, but here's what our guest said.
First of all, liquidity. Savings onshore, as you know, have recovered dramatically in the last 18 months. It's a great component of the market. Southbound flows, as a result of that, are very, very robust. Hong Kong, still liquidity, but the price of money. Interest rates in Hong Kong have been extremely low. That's encouraging investment opportunities. So liquidity is a big one. I think the second one is the lack of alternatives. If you're investing in the region, China government bonds are hovering around 1.6%. Equities look pretty good.
From our clients and investors is sentiment has improved. China still faces many challenges, but this rally in the equity markets has got some legs.
Yes, so some of our guests they're talking about further upside ahead, possibly for Chinese equities. It's interesting as well. I mean, going back to that scoop, that they're looking at ways to make that rally look a little bit more sustainable maybe in China. This also goes into Shuli Ren's opinion piece today, because President Xi is someone who's not really known for prioritizing stock market returns. But as Shuli says, our opinion columnist, she thinks that there might be signs that that's changing. So she joins us now. And Shuli, I mean, it's that key question. I mean, Xi needs the stock market to perform maybe a little bit more than he did in the past.
Absolutely. In the last 5 years, China basically entered a fertility crisis. Before the pandemic, 15 million babies were born each year, right? Last year was a dragon year, auspicious, and not even 10 million new babies were born. It's a 1/3 drop in fertility rate. And if you look at the demographics, in 20 years' time, there will be one worker supporting 3 pensioners. That math just simply does not work. And the question is, how will China, a so-called socialist state, support so many millions and millions of retirees, right? Where will the wealth be generated? The housing market is not doing that great, right? The economy is not going to be doing that great, and then the demographics is not that great. So the only way to create wealth, as we have seen in the United States, is 401ks, people's stock portfolios. And that's why he has to make sure China's stock market is not doing too bad.
I want to highlight what you just said. 1 new worker supporting 3 new pensioners.
Yes.
How can China pay for its social security system?
Well, the stock market, just like the U.S., right? Like in the U.S., the boomers are the wealthiest, right? because of the soaring value of their homes and then their S&P 500 portfolies. And what you are seeing is that China is trying to do the U.S. style. They are starting with this IRA accounts, similar to what U.S. has. But that's why China needs to make sure that there is a slow bull market, because if we're seeing crazy rallies and busts like what we saw in 2015, Chinese people are not going to put their money into their IRAs.
And so I guess that, again, that need for something that looks a little bit more orderly also lends weight to our scoop today at Bloomberg, that they need to have more of a modest or more gentle appreciation of the stock market.
Absolutely. I mean, Americans expect the S&P to rise, say, 8 to 10% a year every year, right? If the Chinese households have that kind of expectations, they will put money into the retirement accounts, and then they will be able to retire. As of now, basically, a lot of people cannot retire.
Okay, Shuli, thank you. Shuli Ren there, a Bloomberg Opinion columnist there, talking a little more about why President Xi it has to love this rally here right now, and really talking about the structural challenges that we're seeing there as well. Still ahead on the China show, we're talking a little more about what Beijing's military parade yesterday tells us about the purges in the People's Liberation Army. But first, we are speaking with the CFO of EHang on the latest in its flying taxi business. That exclusive interview coming up next. This is Bloomberg. All right, take a look now at EHang. This is, of course, the Chinese aviation company that makes flying taxis, and passengers can be carried in their bubble-like automated electric aircraft maybe pretty soon as it flies over cities. They already had some trials in some cities in China, Guangzhou, Hefei, the like there. So certainly there's a lot of optimism and a lot of attention to this space here as well. The company also reported second quarter earnings last week with revenue up 44% year on year. Joining us exclusively on set is Garner, CFO of EHang, joining us here. Garner, it's good to see you. I had to bring back what happened just a few weeks ago when you mentioned in your earnings about really cutting the sales outlook for not just 2025, but really the next 3 years as well. This is coming a time when you're saying EHang is really benefiting from all the development that's going on in China. Can you square those two sort of things now?
Yes. We are just we're adjusting our revenue to 500 million RMB this year. And just for this year, not for the next 3 years. We're still very positive for the...
But the volume sales, you've actually cut down, right?
No, we just adjust down our revenue for 2025.
Okay. Yeah.
We are redefining our strategy. Instead of accelerating order delivery, we are placing top priority in building up a service support for our customers. Yeah, we believe that we want to ensure our customer they purchase our eVTOL can have a safe, orderly, and regular commercial operations. Yeah, we believe in discipline and long-term value creation. So that's why we believe that we are building up a near 100 ground crew team to have a better support to our customer for next year. So next year we are still quite positive. We just adjust down, so it's kind of a timing issue.
So then how does that also feed into your expectation around the deployment and the scaling up of this technology? Where are you at right now, and how do you also see that changing over the next few years?
Right, because the passenger carry eVTOL, is a brand new industry, and safety is the utmost important thing. And so we'll have a step-by-step approach. So first step, we're using our eVTOL in the scenic area. So lots of there are over 15,000 scenic spots in China that are A-rated or above. So there are great demand for that, using eVTOL for aerial sightseeing. So we have seen that our customer in many places across our China that had purchased our eVTOL for aerial sightseeing. That's the first step. So after a period of time operation in the scenic areas for eVTOL, then we should be able to see gradually expand into flying from point A to point B, which means transportation.
When does that happen?
The authority didn't indicate when can we do that, but we're expecting maybe after next year of operation in the scenic area, we should be able to expand into point A to point B. Take overseas development, for example. Right now, we are conducting a so-called sandbox trial flight in Thailand and also in UAE. So we're going to do that. The local authority in Thailand, also in UAE. We plan to do that later part of September or October. After we fly a period of time, let's say 2 months, safe flight in that particular area, the local authority will allow us to fly from point A to point B. It could be like aerial sightseeing, could be a transportation. So once we believe that the overseas development like this will have a very big positive impact back to China. So that's the first step. From point A to point B, providing like transportation. For example, providing shuttle services from the airport to various locations in the downtown will save a lot of time. Right, and next step, ultimate goal is to have providing the air taxi services. But that will require extensive building up of infrastructure in the city for landing pad, e-port, and the command control system, digital system to control all these eVTOL flight in the low altitude space. So that might take quite some time. But we believe we'll get there ultimately.
Yeah, JP Morgan had a very interesting note about the company of how you have this secret weapon, which is you were the first to snag all of these CAAC certificates in China as well, and really giving you that first mover advantage here to be number one in the industry, essentially. I mean, it seems like other rivals right now, I mean, you obviously see the likes of XPeng and some of these big names are kind of delving into the space, but they're still maybe a few years behind. How do you maintain that lead right now? Do you see any sort of hiccups in terms of execution in the next few months or years?
Right. Being the first company in China as well as globally in the eVTOL industry to attempt all the required certificate, we are the first company. And because we start this product, this research, this development very, very early, even as early as 2016, we launched the world's first human carry eVTOL, in the CES show in Las Vegas. So we obtained all these certificates in late 2003 and also early part of 2004. With that, we have a first mover advantage. Aviation, we are in the aviation industry. Aviation is a highly regulated, it's a high entry barrier industry. Yeah, therefore, eventually, definitely would not be like a EV car. You see all the margin squeezing. But we believe, we are having like a 60% above gross margin. Continue, that should be sustainable. So with the first mover advantage, first of all, that eventually will scale up the production and delivery, before even when our peers are getting licensed a few years later. And in this few years' time, it's a critical period to have like a market share. For example, when we use the eVTOL in the area sightseeing spots, right? All the sightseeing places, if they want to acquire eVTOL, they will purchase our products first.
Yep.
And when it comes to transportation, to provide public transportation for any city, that I believe in each city only will have one or two operators to work with. And we will be the first one. And we will occupy the important spot, and we have established many important partnerships with various cities across our China. So this first mover advantage, to ensure our success in China and also globally. We see our global peers and Joe Archer in the U.S. They are also going through the certificate process, and it probably will still take some time. But the global demand interest is strong. As I mentioned, that Thailand, surrounding area, Malaysia, Indonesia, Singapore, Vietnam, Cambodia, they're all watching Thailand's sandbox trial flight. Once we can start the first globally, possibly, fly from point A to point B in overseas, let's say in Thailand, the following countries, the surrounding country will follow. We'll see a great order to come in. And same thing we are expecting in the UAE. Our partner in UAE also preparing for the sandbox trial flight. Yeah, one success. Middle East is UAE is a great showcase in the Middle East and the surrounding area.
Just quickly, Tesla dominated in the infrastructure side as a first mover. What's your plan as you roll out the infrastructure on the ground to also make your mark in China but also globally?
Right, the infrastructure, right now, lots of, in China, for example, lots of state-owned construction company, they're extremely interested in this area. So they'll be working with the local government to build the infrastructure, landing pad, vertiport, and, in various locations. And we will be working with them. So once it becomes public transportation, we will be the service provider. We're interested in doing that. We'll rent the infrastructure from those providers. Yeah, so the whole value chain, infrastructure is an important player, and there are many companies that dedicate in that area. And globally, also that there are local construction companies that are interested in doing that.
All right, well, Connor, thanks very much for joining us this morning. That was Connor Young there, CFO of EHang. Joining us, exclusive interview then. We'll have plenty more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. We're just about an hour away from that 30-year bond auction in Japan, and certainly there's going to be a lot of focus on what sort of demand is going to be out there here today after what we saw, right? So the record high when it comes to the 30-year yield, we're briefly just slightly lower here this morning after what we've been seeing, this bond reversal globally after that JOLTS report from the U.S. But certainly a lot of questions about the demand. The 10-year bond auction was actually quite good. 2-year wasn't so good. So what does it mean? But really, long end is where we're seeing the most pressure here right now.
Yeah, and a big focus, as you said, on that bid to cover ratio. Anything under 3, that is a cause for concern. And it's been the global bond dynamics, of course, lots of concerns around the fiscal sustainability. Do governments or will governments be prepared to rein in their spending? But also concerns about the domestic pressures that Prime Minister Ishiba is facing at home as well.
Yeah, I mean, he had a meeting with Ueda yesterday and maybe sending a signal of coordination between the government and BOJ. But then again, the deputy governor just a few days ago didn't really sound that hawkish either when it comes to rate hikes. So certainly that was a disappointment for the market as well. Here's how the rest of the markets are doing. U.S. futures are punching a bit higher here today. The dollar is flat. You're seeing actually mostly green across the board here, but we are seeing Asia doing, relatively speaking, okay. But the oil space is interesting given the drop in oil. There was this report that OPEC Plus might be considering boosting some supplies in that weekend meeting. But also China, that's where we're seeing our Bloomberg scoop, where things are now sending a bit of a chilling sort of signal here to the market that maybe things need to slow down a bit. You are seeing the Hang Seng down about 0.5%, but onshore you're seeing the CSI 300 and Shanghai Composite lower by more than 1% right now.
Yeah, that's right. So it's this Bloomberg scoop we had essentially where we're understanding or learning from sources that officials could be looking at ways to slow down the rally. And of course, no investor really likes any sign of heavy-handed intervention in China. But let's also take a look at what's happening in the US, because President Trump has insinuated that trade agreements with economies including the EU, Japan and South Korea would be axed. That's if his global tariffs are ultimately ruled illegal by the US court system. Trump said on Wednesday that the duties gave him leverage to strike deals with major trading partners that saw the US raise import taxes on their products without retaliation. And they gave the US a chance to be, quote, unbelievably rich again.
Now, Petrobras says that there is a lot of demand for their products in Asia, which puts it in a favorable position to withstand the U.S. trade war. Speaking to Bloomberg, the CEO says India, for example, is open to buying any product that Petrobras can export to the country.
No caso da Petrobras, a gente exporta muito pouco para os Estados Unidos.
In the case of Petrobras, we export very little to the United States. So even if we were reached by this 50%, our export would be easily directed. We have India, China, Asia, they all demand a lot of our products. So we wouldn't be very difficult to remanage. But we export to the United States. We like these exports, and we buy a lot of things from the United States as well. And we're going to continue doing it.
When you look at the global landscape, the president has also put high tariffs on India, trying to pressure them to stop buying crude from Russia. Could that be an opportunity for more Petrobras exports?
Sim, nós exportamos. A India, por exemplo.
Well, India, for example, it introduces itself into Petrobras as a procurer of any product that we want to export there, as a buyer. So we usually say, no, the Indians say, you are increasing your oil production, your production of derivatives, and anything that you want to export more, we will buy. Asia as a whole also buys from us. We export, for example, a bunker with 24% of renewables to Asia. And every ship, every vessel that we send to Asia sells a lot, with high percentages. And so we keep looking at that and looking at this industry that is going to continue being relevant for the next 2-3 decades. This is what we believe. So, and at the same time, we need to ensure that energy transition needs to take place in Brazil, and that we need to be part of that, and we need to deliver to that as well.
Oil products were exempt from a lot of these tariffs, but have you seen an impact on the supply chain? Have costs gone up? Have projects been delayed?
Supply chain tem sido uma questão, sim.
Supply chain has been an issue. For example, we had goods that are not shelf goods, and these goods need to be requested in advance in several of our projects, and we have seen some delays in delivery. So, for example, things that we expected to ensure 2 years for delivery times are reaching like 3 years. So this impacts some of our products as well. But I think that Petrobras needs to anticipate with itself with regard to these demands, so that we can be more and more agile for the market.
That was the Petrobras CEO there speaking to Bloomberg's Anne-Marie Hordern in Sao Paulo. And let's stay on energy markets and geopolitics and take a closer look at Russia's apparent deal to build the Power of Siberia 2 gas pipeline to China via Mongolia. Beijing hasn't actually officially confirmed the agreement, but analysts say the move signals a strategic shift, one that challenges US influence and could reshape the global LNG market. Let's bring in our Asia Commodities and Energy Managing Editor Clara Ferreira Marquez, who joins us now from Singapore. So, Clara, I think we just sort of indicated really the significance of this deal, but what more do we know about it, given it hasn't really been confirmed so far?
Well, it's not been confirmed by the Chinese side. So Power of Siberia 2 has been a twinkle in Vladimir Putin's eyes for a very long time. He's really wanted this even before the war in Ukraine. Since the war in Ukraine, Russia's invasion of Ukraine, it's become that much more important because of the way that Russia needs to shift from a European market that was really crucial to its gas exports to Asia. And given that Russia has limitations around liquefied natural gas, pipelines are vital. And so Power of Siberia 2 is really instrumental there. The issue, however, is that China was much more hesitant. For China, it's all about diversity of supply. They're very wary of depending too much on Russia. And of course, with an economy that's cooled, you don't really need that much gas.
So yeah, you mentioned how hesitant they were. Why do you think China refused Power of Siberia 2 for years? And why are they changing their stance now, it seems, right now? Obviously, we saw those pictures and the optics with Modi, Putin, and China and Xi, walking together on stage.
I think it really is about optics. There's a lot of theatre here, and for all involved, theatre is very, very important. What we've seen is, so Alexei Miller, the head of Gazprom, came out and said it was a binding agreement. They'd agreed on a number of key issues, not importantly price, but on a lot of other issues. The Chinese, however, have been much vaguer. They have just said there have been energy agreements. That's really what's quite interesting here. But they have allowed Russia to make this public pronouncement. Importantly, they've also taken a single cargo of LNG from the Arctic LNG 2 project, which is sanctioned by the US. So these two things happen around the meeting in Tianjin and then in Beijing. So very, very significant diplomatic move, I guess, a means of allowing Vladimir Putin to claim this energy win, which he very, very much needs. What China does from here and how exactly that deal around Power Siberia 2 is framed. So, for example, how much flexibility is involved at what price, undoubtedly a bargain price for China. All of that remains to be seen, and it will be very, very interesting as that unfolds over the coming months and years.
Yeah, it's really interesting, that point you're making there. There's sort of no confirmation yet or no idea around how much demand there could be from China, but maybe this pipeline also opens up the prospect of more customers for Russia in Asia.
Well, it will almost certainly go into China. The issue, though, is what does it displace? And in all likelihood, what it's displacing is LNG. And remember that if you have the US as a giant producer, China as a giant consumer, they are natural partners. But what we've seen, of course, with the erosion of relations is that a lot of that US LNG is going to have to find a new home. And that, of course, will have a global impact. That's really probably the biggest takeaway here for any international readers. It's obviously the political side, but the potential knock-on effects for global LNG.
That was our Asia Commodities and Energy Managing Editor there, Clara Ferreira Marquez in Singapore. And just as we've been speaking here, we've had an alert crossing the terminal. This relates to Trump, who has asked the US Supreme Court to uphold his global tariffs. Of course, this was a ruling that was reversed or disbarred, I guess, a few days ago, saying that President Trump's tariffs were illegal. Now he's moving it forward from the appeals court to the Supreme Court and asking them to uphold it instead. I mean, this has been a Supreme Court that does have some judges on that in his favor. It would be a big question, of course, when it reaches this level, which way does it go?
Yeah, and that was the reason why we didn't see it go into effect, right? Because they were waiting for the Trump administration's move and what it would mean there with the U.S. Supreme Court. So that certainly is the next move here. I don't think it's a big surprise that this is developing in this way. But certainly, yes, asking the U.S. Supreme Court to uphold his global tariffs, this could be a very kind of fluid situation that could go on for some time. So that's the latest on that front as well. In the meantime, we are checking, of course, what's going on onshore markets here, and we continue to see that selling pressure here. There you go, CSI 300. We're now at session lows. We're down some 2% for that benchmark here, and this is on the back of our scoop, possibly, that China is said to be weighing curbs on stock speculation, and the Shanghai Composite is also down by about 1.5%. Renminbi has been a little bit stable, but weakening on there a little bit there at 714 levels as well, and we are seeing government bonds bid up here. We're down 1 basis point at 173. We're at around those 2-week lows for your Chinese 10-year yield. This is Bloomberg.
I watched the speech last night. President Xi is a friend of mine, but I thought that the United States should have been mentioned last night during that speech because we helped China very, very much.
President Trump on how he thought his Chinese counterpart Xi Jinping should have recognized the U.S. during his speech at Beijing's military parade. But yes, it seems like he was really watching that event showcasing China's military strength and global ambitions, of course. And let's get to our chief North Asia correspondent, Stephen Engel. He joins us from Beijing. He was at Tiananmen. And Steve, you know, what was it like, really? I know we try to get to you multiple times, and certainly there was so much pomp and circumstance. What stood out to you the most?
Yes. Well, it's interesting that this story has come about this hot mic incident. And I was there in Tiananmen Square, and, you know, you could hear a pin drop when the video screens, large video screens, were showing Xi Jinping, Vladimir Putin, and Kim Jong-un walking through the Forbidden City and up the stairs. Everybody in the square and in those stands and the risers were quiet as church mice, and you could hear them talking. You couldn't quite make out what they were saying, but clearly they said something substantial because it was caught on the mics. Let's hear. You can hear for it yourself. You know, one thing we learn in television, guys, is the mic is always hot, right? And we could actually hear that chatting back and forth between them. And I even turned to my camera and said, "Are you hearing this? I think somebody might be in serious trouble because they've left the mic open." And it was very interesting. And obviously you could hear these two leaders who are both in their 70s talking about potential immortality and living longer through transplants of organs and the like. It was a little creepy and a little interesting at the same time.
Yeah, certainly a hot mic incident for the ages. But what about what else came out of the event? Because, I mean, going into it as well, we were talking yesterday about how there was so much question marks over who was going to be on the stage, who wasn't going to be on the stage. What did you learn, or what did you glean about Xi's continued efforts to remodel and remake the military as well?
Well, we do know that he's tried to streamline the military and modernize it and root out corruption. So he's really taken on that mantle of weeding out graft and inefficiencies. And he is, we've seen over those 2.5 terms now, at least 14 generals either be under investigation or be removed from public view. We've had 2 defense ministers fall from grace. We've seen the head of the PLA Navy, an admiral, also fall from grace. We've seen the rocket force leader also be removed. And the one that was really questioned going into this parade was the fate of vice chair of the Central Military Commission. That's He Weidong. He did not appear yesterday, and he did not appear in any of the broadcasts. And we have some video of when Xi Jinping rode in his Hongqi limousine out to address the troops. The protocol is when he has to be invited to address the troops, usually by the commander of the Central Theater, and that is General Wang Qiang. But he did not go out in his own vehicle and address Xi Jinping. In fact, it was a lieutenant general who did those honors. So that has led to a lot more speculation that perhaps another general, in this case, General Wang Qiang, has possibly also been brought under investigation. So it's just more speculation into the ongoings of the Chinese PLA, which, we all know the People's Liberation Army is far more opaque, less transparency in the army than even the government itself.
Yeah, absolutely. And you can see that at least 14 generals promoted under him are already thought to be caught up in an anti-corruption probe. But that was really great that our Chief North Asia correspondent, Stephen Engel, in Beijing, and we'll have plenty more ahead. This is Bloomberg.
This China sell-off on shore is getting a little bit more prevalent here right now. You take a look at how the CSI 300 is doing. We're down some 100 points. We're down about 2% here, and you're seeing more of that in some of these sort of innovation boards and the like. Star 50 was also seeing a lot of selling pressure here today. And we're seeing now with the CSI 300 dropping the most since April 7th of this year. So that brings us just days after Liberation Day, of course. So this just goes to show, right? This is on the back of our scoop on them, how they're going to find ways, maybe tinkering around the edges to try to slow down this rally, Bell.
Yeah, it's certainly a big question for regulators. I mean, it's been sort of a $1.2 trillion rally since the start of August. Is that healthy? And what could be the ways that they would be looking at sort of trying to cool it down a little bit, especially when you've seen things like margin financing, for instance, continuing to pick up. But it is a very tough balancing act for regulators as well, because you still want to have that steady shift in liquidity, portfolio positioning toward equities, but you don't want to have undue speculation. That's the point that Fred Newman is making from HSBC. So, I mean, it's very sharp, that sell-off we're seeing in particular, and also the kinds of stocks we're seeing it in. For instance, Cabricom, for instance, it's been one of sort of the darlings of the rally so far, because there was this sort of thinking that it could be the next NVIDIA in China. So, I mean, that is one of the big standouts to the downside today. But chip stocks generally, I mean, they're very much under pressure so far. You can see, for instance, SMIC, Huawei, I mean, big sell-off really in the red. Solar stocks, actually, last we checked, were still moving higher.
Yeah, I mean, the Cabricom move is quite substantial, right? 12% to the downside here. This is already on the back of what the company actually said just a few days ago about, this rally is not really based on fundamentals here right now. On the flip side, there are still bright spots as well, given what we've been seeing with the U.S. Trade Court ruling that these Biden-era solar tariffs, that moratorium is invalid. So some of these domestic solar players are doing quite well here today in the face of this big sell-off that we're seeing, generally speaking here. So JE Solar, the like, down up some 4%. Xinjiang Dagao New Energy is up 8.5% as well. So certainly that's one thing to watch, right? Is how the regulators are going to look and how they change sort of their stance of this rally as well. Obviously we've been talking about how they want a slow bull run here, and at a time when we're seeing stocks and the renminbi, for example, are also moving in tandem. So there's a lot at stake here on how they actually come through and what the tone's going to be like from the likes of Wu Qing.
And I also think it makes it so timely for Shuli Ren's opinion piece today, and she's just talking about why you need to have such an orderly rally, and that's because the government's going to end up being more dependent than ever on maybe a healthy stock market to try and pay for people's pensions. But let's also take a look at the China stocks that are exposed to India as well. They're still a little bit under pressure, but they could be beneficiaries out of these GST changes. Yeah,
they're certainly interesting, right? Because when you talk about what's been going on in India, and the big sort of headline is, these 50% tariffs in the U.S., you're seeing ways that the government now is trying to insulate its economy from these external threats. And so certainly, that's not really the key focus for some of these stocks here today, just given, of course, what's been going on, the sell-off onshore. But then again, the fact that they announced this sort of this consumption tax cut certainly is one big thing that potentially could be a next catalyst for this market, which, of course, is one of the worst in the world this year. Joining us is Ruchi Bhatia from New Delhi. On what more do we know about this consumption tax and the like, and really, how do you think it's going to really benefiting the economy?
Well, this is the biggest overhaul that we've seen in the goods and services tax regime, which is India's consumption tax, since it was introduced in 2017. Remember, the announcement was made by Prime Minister Narendra Modi during the Independence Day speech from the ramparts of Red Fort. And now, within a month's time, the GST Council, that is headed by Finance Minister Nirmala Sitharaman, has taken the decision to reduce the existing GST tax slabs from 4 to 2, which essentially means that there will only be two tax rates, a 5% tax rate and an 18% tax rate. There are a handful of items that will be in the 40% category, but that is only for the time being. Having said that, almost, in fact, more than 400 items of daily essential use have been reduced and put in the 5% category, and this includes, items such as, toothpaste, soaps, detergents, shampoos, stuff that you use on a daily basis, and others like, television sets are now in the 18% category. The federal government will lose 480 billion rupees from this entire exercise, but one needs to see what the government is now going to do to make sure that the states are adequately compensated for their loss as well. Having said that, this is coming in at a time which is just ahead of the main festival in India, that is Diwali, that happens to be in the month of October, and it is expected to give a big fillip to consumption back home. Remember, consumption contributes more than 60% to India's gross domestic product, and it will be very, very important to see the kind of buoyancy that we will see in terms of consumption demand in the next few months, so to say.
Ruchi, thanks so much for joining us this morning. That was Ruchi Bhatia there in New Delhi. And just as we go to break here, just taking a look at what's happening with BYD shares, because we're seeing those under pressure. The story here is that BYD has cut its 2025 sales target by 16%. That's Reuters reporting. We'll get the details on that. You've watched the China Show, and Insight with Linda Ramin is next.